Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the euro currency again. It was really dramatic action yesterday. That's why I have decided just to calm down here a bit, so don't be too upset with this action, or don't be too glad with this action, depending on your position. So yesterday I have heard the screams of the bears that everything is lost, so market has turned up and no bearish development will follow, so that's probably we are doomed, and so on. But I think that we should not overestimate this recent rally, guys, until currently. So it's nothing has lost yet. Yes, the reaction was really significant because Mr. Draghi has given the hint on the no rate cut in the nearest future, but he hasn't cancelled the already working quantitative easing program that will hold till the end of the year. He hasn't cancelled the further purchasing of the government European bonds. So, and he hasn't cancelled the liquidity inflow in the markets to stimulate the inflation. Besides recent data from the European Union, you probably know that the inflation is really anemic. The 5-year forward rate on inflation in the European Union stands at approximately 1.5%. So it's really low inflation in the perspective of the 5 years. Short-term inflation and the recent CPI numbers are really even negative. So that's why, yes, reaction was strong, and this is understandable, but do not panic, do not follow the panic right now, and do not overestimate the validity, the importance of this recent rally. As it has started, as soon it could be cancelled. Because recall what we said when the negative non-farm payrolls has happened. Not negative, but they were poor. When the euro shows this rally up, we said don't hurry with making the decision based on these numbers. They could be just the occasional, this isolated data, and market could easily erase this rally. So take a look. This rally has happened very soon. So currently, guys, I could say only one thing, that welcome to the currency wars. We're just the victims of this struggling between the central banks, and this will continue definitely, because as you can see, if you will take a look at the global picture, you will see that no measures that have been taken as by the Federal Reserve, by the Bank of Japan, as European Central Bank, they do not work. They can't stimulate the consumption. They can't stimulate the normal industrial growth. They can't stimulate the inflation. So they just do not work. And they will continue to do this, and they will struggle with each other to protect their own currency. We see what the Bank of Japan does. We see what the European Central Bank does. The Federal Reserve right now, it's a bit, its hands are tied because by the promise that they will think about the probable rate hike, since they have given a hint in December that they probably could take some another steps of the rate hiking in the 2016. That's why they can't just cut the rate right now. And this it's a bit not very comfortable situation for them right now, I think. Anyway, yes, that was the bullish action for the euro currency, but I'm not sure that it definitely will lead to further upward rally. Today, guys, we will estimate the clear points to watch for, where we could make the final judgment, where to expect further upward action on the euro currency, or where we will get the confirmation that the bearish development has been reestablished. You probably already understand what I'm talking about by looking at this chart. So you probably could see everything by yourself. What really has happened yesterday? Market has rallied and reached the FIB resistance area. It's 110.50 area. Sorry, 111.50. So by this rally, also it has reached yearly pivot point again, and we could say that probably it has hit the daily overbought. So today, hardly we will see any further upward reaction to the upside. But this is not enough, guys. This is not sufficient action to say that we stand on the road to the 1618 extension of our A, B, C bottom, D pattern. So market has hit 100% extension, shows deep retracement to the 618. In fact, this was the last chance for the euro to keep the bullish ABCD pattern valid, and it has been done. So you can see market has stopped here, shows upward action, but to confirm that we really stand with this ABCD continuation, market should take out of this top, because 1618 target will stand somewhere in this area, and to confirm that's really rally to this target, it needs to move above the top. Only in this case we could say yes, probably market stands on the next target of the 1618. Currently we have another pattern that makes this action possible. Yesterday, guys, on the completion moment of our double bear and body sell pattern, bear and body has worked very well, by the way, as you will see a bit later. But at the same moment, market has formed, take a look, bullish grabber here. This bullish grabber suggests the taking out of this step. That's why this pattern that has been formed yesterday makes chances that market still will continue move higher. The grabber doesn't point on the real reaching of the 1618 extension. It just tells that market should take out of this top, because this is its target. This pattern, let's say that it increases the chance of the further upward action. At the same time, market stands at the significant resistance, and grabber also could fail as any other pattern. That's why here we should monitor the action inside of this long candle, so long ranged candle, because they break out of this range usually shows where market will follow. If market will fail to continue move higher, this is also possible, because guys, the disproportions in European Central Bank policy right now and the Federal Reserve policy still stand on the surface, and it hasn't disappeared. Yes, Draghi said that the European Central Bank will not decrease rate anymore, but the distance between the Federal Reserve policy that intends to hike the rate and the European Central Bank that takes place of the quantitative easing program is still different, and that's why this is in long-term perspective still will be the bearish pressure. What if tomorrow, for example, Federal Reserve will tell that will come with the hawkish comments on the rate? This will push rate to the downside. That's why it's too early to speak that euro currency turns to some long-term bullish trend. This is reaction, yes, but we need to see how stable this reaction will be. Meantime, market stands at strong resistance area, and in current situation, another pattern that could be formed here is the butterfly. And this butterfly really could lead market to the 103 area, so our short-term destination point on the daily chart. This picture leads us to conclusion that we should keep an eye on two possible levels, two major points. First major point stands right here at the top, and if market will move to the upside, it simultaneously will tell us that market is continuing with the ABCD pattern to the 1618 target, so will be next hour target in this case. And second, simultaneously market will erase this butterfly opportunity. That will be double confirmation of the bullishness. Another point to watch for is the low of this grabber that simultaneously will be the low right here. If market will drop it down, it will simultaneously erase as this ABCD pattern, as this larger ABCD, if you could draw it. So it will just erase the chance on the further upward continuation in short-term perspective. Besides, market will stand below the yearly pivot point and with the following conclusions. So these two major levels on the daily chart. What we have on the 4-hour time frame chart. On the 4-hour time frame chart, you can see in the short-term perspective that market has hit 1618 extension based on our double bread body cell patterns A, B, C bottom. 1618 has been hit. Also take a look that market has met the monthly, this is March, pivot resistance 1. So if you surplus these levels to those levels that we have here, you will get not really bad resistance, hardly market passed through during today's session. So some bounce down, pullback has great chance to happen. And my choice is the market should reach an area around monthly pivot point. So 1030 area. Again, the same 1030. So that was the confluence breakout, that was the resistance, 3-8 resistance has been broken. Now market returned back down, and if you will take a look at our chart, you will see that this also will be the 50% level. So that is what 1020 area is the 50% support of the whole yesterday's rally. And we know that the market likes the 50% level. So the area around 1020 to 1050 area is very strong support, and I think that's a natural target of this possible drop that is coming today. So this also will be previous consolidations, and as you can see, monthly pivot point. Now guys, couple of words on our recent bread and butter trade. As soon as the hand shoulders pattern has been formed here, as we said yesterday, as you can see, market has dropped and complete not only the bread and butter minimum target, but it also has completed the hand shoulders target. So we'll take a look at this A, B, C top. This 1618 target has been complete, and the classical target of the hand shoulders, if you will measure the distance between the top of the head to the neckline, count it to the moment of the breakout, you will see that almost pips to pips the classical target of the hand shoulders has been completed. So despite on this dramatical action, bread and butter again confirms its importance and its reliability. So bread and butter is very nice pattern. Although we have missed an entry here, those of you who have held a short position on this trade is probably should done well with this bread and butter trade. So this will be really dramatic, some kind of the sophisticated trade, because in most cases bread and butter takes a bit simpler development. It's a bit simpler to trade, but this example of the bread and butter was really, as you can see, really sophisticated example of the bread and butter. So that's been said, on the euro currency, let's keep watching what really will happen, and do not follow the panic. Do not make the too fast decisions on the perspective of the euro currency. Let's see how stable this reaction will be, and let's see how market will behave around the major levels that we have discussed. That will probably sooner rather than later will give us the answers in what direction euro will follow.